Welcome back to the Pro Ticker Podcast, your Thursday morning edition covering major financial magazine headlines, everyone. Today, we're embarking on a crucial deep dive into the latest financial reports. Our mission really is to cut through the sheer volume of information out there and bring you the most critical, actionable insights from the global markets. We've been sifting through recent reports from leading financial outlets, drawing heavily from CNBC and Bloomberg, to give you a comprehensive look at the significant movements and narratives shaping the financial world. And it's certainly been a week with plenty to unpack.
It has indeed. I mean, what we're witnessing is just this complex web of interconnectedness. You've got policy shifts, corporate strategies, geopolitical events. They're all influencing a very, very dynamic global environment. Our goal today is to help you understand not just the numbers, but, the powerful forces driving them.
That interconnectedness is truly striking, yeah. So let's begin our deep dive with a global market snapshot, focusing on Asia Pacific and some key economic indicators. Overall, we saw a mixed but, generally upward trend in Asia Pacific markets today. Most of them Japan, South Korea, China, Australia. They mostly rose. The notable exception was India's Nifty 50, its benchmark stock index, which saw a slight decline.
Right. And what's fascinating here, or maybe concerning, is Japan's situation. It continues to be a point of considerable focus. Their trade data showed exports falling. Again, second consecutive month in June.
Second month, wow.
Yeah, contracting by 0.5% year over year.
Yeah.
And this followed a 1.7% drop in May. So it completely reversed the 0.5% rise economists had actually expected, a real miss.
And drilling down into that a bit, the decline in exports to the U.S. was pretty significant, wasn't it?
Oh, definitely. Down 11.4% in June.
Which is even worse than May.
Exactly. Deepened from that 11% fall in May. And exports to China, Japan's largest trading partner, they were also down by 4.7%.
A critical point here, I think, is the automobile exports to the U.S. I mean, they plunged by 26.7% in June.
Yeah, extending that 24.7% drop from May. It's huge.
And cars are such a cornerstone of Japan's economy, right? Making up over 28% of their 2024 shipments.
Exactly. Which raises this really important question about how Japanese car makers are responding to these trade headwinds. The data suggests they're largely absorbing the 25% U.S. tariff, basically through price cuts.
Ah, okay, so they're eating the cost.
Pretty much.
Yeah.
While car export volumes to the U.S. actually rose slightly, about 4.6% year over year,
Right.
the export value slumped by over 25%. So it really indicates they're prioritizing maintaining market share over margins,
Yeah.
rather than passing the full cost straight to consumers.
It's a strategy for the short term, I guess. But
Yeah.
is absorbing tariffs like that sustainable long term? What are the broader implications for Japanese companies if this trade environment just persists?
Well, that's precisely the core challenge, isn't it? This prolonged export contraction, especially in cornerstone sectors like autos, it just signals a deep vulnerability to trade tensions, and it could ripple right through global supply chains. This isn't just about Japan's immediate economic health.
No.
It's intensifying fears of a technical recession for Japan. 2 straight quarters of negative growth.
Which they already had in Q1.
Exactly. And that could potentially impact its trading partners, too. There was an interesting perspective from Takeshi Ninami, senior economic advisor to Japan's prime minister. He sort of suggested Japan might have taken too hardline a stance in the initial tariff talks, possibly leading to this current predicament.
Interesting take. It certainly sounds like a challenging dynamic over there. Meanwhile, shifting our gaze across the region a bit, Australia's unemployment rate rose.
Yeah, to a 43-month high of 4.3% in June. That was higher than forecasts.
That's a significant jump.
It is. But look, not all news out of Asia was contractionary. You mentioned Singapore earlier.
Right. A bright spot.
Absolutely. Singapore's non-oil domestic exports unexpectedly surged 13% in June, hit an 11-month high.
13%. Wow. What drove that?
Mostly electronic products, non-monetary gold, and specialized machinery. And their stock market has just been on a tear, extended its rally for the 9th consecutive day, hit a fresh all-time high.
9th day rally. Amazing. And India. We mentioned the Nifty was down slightly, but inflation.
Yeah, good news there. June, inflation cooled to 2.1%. That's the lowest in over 6 years. Actually came in below expectations.
Okay, so that offers a bit of a counterpoint to some of the other economic headwinds we're seeing in the region.
It does. It really highlights the varied economic trajectories across the continent, different stories playing out.
Okay, that gives us a real sense of the challenges and, some bright spots across Asia Pacific. And speaking of economic forces, The political currents in Washington have been creating their own set of market tremors this week, which leads us nicely into the Washington whipsaw: politics, tariffs, and the Fed. I mean, the drama around Federal Reserve Chairman Jerome Powell was certainly a headline grabber today.
Oh, definitely.
President Trump denying plans to fire Powell just hours after reportedly telling Republican lawmakers that he would fire him.
Yeah, that whipsawed the markets almost instantly. U.S. equity futures initially slipped, Treasury yields popped up, the dollar was volatile.
All over the place.
Pretty much, yeah, all due to that speculation, though most of those moves unwound after Trump's denial came out. But if we connect this to the bigger picture, I mean, analysts widely warned that actually firing Powell would be a mess.
You think?
Oh, yeah. Significantly negative for markets, they said, potentially driving a steep equity sell-off and a sharp spike in long-term yields.
That paints a pretty stark picture of market chaos. But politically, why? Why would President Trump even float such a disruptive idea, even if he denies it hours later? What's the strategic play there, if any?
Well, it certainly raises questions about political messaging, maybe leverage.
Yeah.
Roger Altman, who was Deputy Treasury Secretary under Clinton, he called the whole idea of politicizing central banks dreadful.
Mm-hmm.
And he contrasted independent central banks like the U.S. Fed with those in places like Turkey and Argentina, which, have historically faced double-digit inflation when politics gets too involved.
Right. It really underscores the importance of the Fed's independence for stability.
Exactly.
And the legal questions around this are complicated too, aren't they?
Very complex. Wolf Research, the analysis firm, they speculated that if Trump actually did fire Powell, Powell would likely sue.
Right.
Which could potentially lead all the way to a Supreme Court battle.
Wow.
Yeah, it's a scenario that paints, as they put it, a worrying image of Powell being escorted out of the Fed building.
Like that past incident with the U.S. Institute of Peace employees.
Exactly like that. It suggests a potential constitutional crisis, really. Something that would severely test institutional norms.
Definitely. The very notion just generates significant market uncertainty and a lot of legal debate.
For sure.
Okay, speaking of things impacting markets, let's talk tariffs again. The U.S. Producer Price Index, PPI, was flat in June. And you might think, okay, maybe tariffs aren't hitting the U.S. economy as hard as feared, but that's not the full story, is it?
No, that's a nuance worth unpacking, definitely. You see, the PPI measures prices at the manufacturer level, specifically domestic firms.
Okay.
So it doesn't fully reflect the impact of tariffs on imported goods. The Consumer Price Index, the CPI, on the other hand?
That includes imports.
Exactly. And that's where tariffs are starting to show their effects. For example, apparel prices. They rose 0.4% in June.
Ah, okay.
And look, the full effect of the updated tariffs might not even be known until after August 1st, as those policies really start to filter through the supply chain.
All right, it takes time. Now, what's particularly striking on the stock side, and this seems counterintuitive, despite these tariffs, S&P 500 stocks with the highest international sales actually outperformed domestic-focused names by 7 percentage points in 2025 so far.
Yeah.
International-facing stocks advanced 11%, while U.S.-focused names rose just 4%. That's surprising, given all the protectionist talk.
It is surprising on the surface, but there are reasons. Partly, it's due to a weakening U.S. dollar.
Ah, the currency effect.
Yeah, that makes U.S. goods cheaper overseas, providing a significant tailwind for multinationals. And we're also seeing just incredibly strong demand for AI-related products, which often come from companies with substantial international revenue.
Like who?
Well, think Monolithic Power Systems. 97% international revenue, stocks up over 20% this year. Lam Research, 93% international sales, up roughly 40%. Even Emerson Electric, 60% overseas exposure, rallied 13%. And McDonald's is benefiting from currency translation, too. It just shows how global demand and currency movements can still, override tariff headwinds for some specific players.
And tariffs are forcing some major corporate strategic shifts, too, illustrating the real-world impact. Volvo cars, for instance.
Right. They're considered one of the most exposed European car makers to U.S. tariffs.
And they saw a sharp drop in Q2 operating profit.
They did. And in response, they're strategically adapting. They're adding production of their best-selling XC60 SUV.
To their U.S. plant.
Yeah, to their plant in South Carolina, while pulling sedans and wagons from their U.S. portfolio altogether.
Why pull those?
Well, largely due to those huge tariffs. 27.5% on European-made cars, and a whopping 100% on Chinese EVs.
Ouch.
Exactly. Their CEO, Håkan Samuelsson, he emphasized that Volvo is definitely not pulling out of the U.S. market, but, they need to utilize their U.S. factory now.
It perfectly illustrates how companies are having to recalibrate their whole global manufacturing and sales footprints just directly in response to these evolving trade policies.
Absolutely. And on a broader scale, President Trump is reportedly eyeing 10% or maybe 15% tariff rates for over 150 countries.
150 countries.
Yeah, with letters notifying them of potential August 1 deadlines. So this indicates that tariffs are probably not a passing phase, but more of a sustained strategic lever being used.
Okay, got it. All right, let's shift gears to our final segment, corporate moves, tech frontiers, and cryptocurrency. We've had some pretty significant corporate headlines just today. Shares in Japan's Seven & i Holdings, the owner of 7-Eleven, they plunged 7 to 9%.
Big drop. That was after Couch-Tard withdrew its $47 billion takeover bid.
$47 billion? Wow, why'd they pull out?
They cited a persistent lack of good faith engagement from 7 & i. So it sounds like the talks just broke down completely.
Yeah.
That's a massive deal off the table for the retail sector.
Yeah, huge. What else?
Well, SK Hynix also saw its shares drop quite a bit, over 8%.
Okay.
That seemed to be due to profit-taking concerns and also a Goldman Sachs downgrade, tied to a weakening outlook for memory semiconductor prices. It just highlights the volatility in the semi-industry right now.
Definitely. But not all bad news in tech.
No, on a more positive note, TFFE's Q2 profit surged nearly 61%.
61%. That's incredible.
Fueled by strong AI chip demand, as you'd expect. Though, those potential U.S. tariffs on Taiwan remained a possible challenge for them, too. It's always something.
Always something. Okay, now let's talk about Elon Musk. He always seems to be at the center of, well, multiple major stories at once.
Doesn't he just?
We're seeing a renewed focus for him in India. Tesla just opened its first showroom in Mumbai.
Right. Bringing in the Model Y, but...
At a premium price, right, like $79,000.
Exactly. Compared to just under $50,000 in the U.S., that's largely due to India's steep import duties.
Makes it tough. And Starlink.
Yeah, alongside Tesla, his Starlink venture also received regulatory approval for commercial services in India. The goal there is rural internet connectivity, probably going to be through government contracts, partnerships, that sort of thing, given its high cost for average consumers.
Interesting pivot to India. Does this connect to anything else?
Well, it's quite interesting timing as it comes after Musk's recent distancing from President Trump. It suggests maybe a broader international diversification strategy for his companies.
A pragmatic move, maybe? Open new large markets?
Would be. Seems plausible.
But it's not all smooth sailing for Musk's ventures, is it? His AI company, xAI, facing some challenges.
Yeah, some significant ones. The NAACP and other environmental groups in Memphis have appealed permits for xAI's gas-burning turbines.
Why? What's the issue?
Citing concerns about air pollution, things like nitrogen oxides, formaldehyde, specifically in majority black communities, they're arguing that xAI claimed these turbines were temporary and didn't need permits initially, which raises some serious questions about environmental justice.
That sounds contentious.
It is. And beyond environmental concerns, xAI's chatbot, Grok, it's also generated controversy.
Oh!
For producing anti-Semitic and sexually explicit content. That led to apologies from the company, naturally, but raises questions about its ethical guardrails and safety protocols.
Yeah, these issues just underscore the complex societal responsibilities that come with developing advanced AI, don't they?
Absolutely. Huge responsibility.
Okay, shifting now to the evolving crypto landscape. There's been some interesting congressional progress, surprisingly, perhaps.
Yeah. House conservatives ended that two-day blockade they had going.
Right.
Finally allowing crypto regulation bills to move forward. This was seen as a bit of a win for Crypto Week and President Trump's recent embrace of digital assets.
And it broke a record, didn't it, for the longest open vote?
It did. Shows you the significant partisan division still there, but they got it moving.
So what bills are moving?
The ones mentioned include the Senate-passed Genius Act, the Clarity Act, and also a bill barring the Fed from establishing a central bank digital currency. So this legislative momentum, it provides some, much-needed clarity for an industry that's long sought defined regulatory frameworks. Could pave the way for broader adoption, maybe more institutional investment.
We'll see. Now, another big move in crypto. Coinbase's new Everything app.
Ah, yes, the Base app. It's replacing Coinbase Wallet.
And it does. What?
Exactly. Well, it combines a whole bunch of stuff. Wallet, trading, payments, social media, messaging, even mini apps, all running on their own Base blockchain, which is built on Ethereum.
So it's trying to be more than just trading.
Exactly. The intent seems to be expanding Coinbase's reach way beyond traditional crypto traders. They're leveraging the speed and low cost of Base, as I say, less than a second per transaction, less than a cent per payment.
Wow, that's fast and cheap.
Yeah. They've rolled out Base Account for identity verification and Base Pay for one-click USDC stablecoin payments, starting with Shopify. And they have plans to bring Tap to Pay to actual brick-and-mortar stores by the end of the year. Very. Coinbase CEO Brian Armstrong has this stretch goal to make Base the #1 financial services app in the world.
Okay. Aiming high.
It's a significant play to integrate crypto more deeply into just everyday commerce and social interaction. Big focus on creators monetizing directly, too.
Sounds like they're really pushing crypto beyond just speculation, more towards actual utility.
Yeah.
Interesting. And speaking of crypto trends, Ether been outperforming Bitcoin recently.
It has, quite significantly. Shot up over 130% since its April low. That's more than double Bitcoin's 60% jump in the same period.
Why the surge?
Well, technically, Ether has broken out of a key technical pattern, basically a chart formation that traders watch. Often signals future price direction, so it could indicate a potential shift in momentum, maybe even market leadership within the crypto space. Something for digital asset investors to watch for sure.
Definitely. Okay, and finally, just a quick look at some corporate earnings, painting that broader picture of strategic shifts we've been talking about.
Right. United Airlines, for example. Revenue missed slightly, but they beat on earnings per share.
Which suggests good cost management.
Exactly. A sign of strong cost control in a challenging environment. Shows how companies are finding value beyond just top-line growth.
And Sarepta Therapeutics
Soared 32% today. That was on the news of a workforce reduction plan aimed at saving $400 million annually.
Wow, big reaction.
Yeah, and there were positive reports from Monarch Casino, Alcoa, AAR, SL Green Realty 2, GE Aerospace, and Netflix earnings are coming up tomorrow.
Lots to watch.
Always.
So, as we've seen today, the global financial landscape is just this constantly shifting puzzle, isn't it? From presidential whims maybe impacting central banks to companies literally reinventing themselves because of tariffs and tech shifts. The key takeaway here for you listening is really the profound interconnectedness of all these events. So the question becomes, what does this ever-increasing interconnectedness mean for how quickly global markets and individual companies have to adapt? And maybe what's the next major pivot point we should all be watching for?
Exactly. The ability to synthesize all these diverse data points, these stories, and understand their implications, that's going to be key to navigating what's ahead. Staying informed is just more critical than ever.
We'll see you all tomorrow morning with new headlines from major financial magazines.